DLF is the one that has reported strong numbers in the third quarter, marking its best ever quarter in terms of new sales bookings. Ashok Kumar Tyagi, who is the managing director of the company, joins in now to discuss the quarter that went by. The stock's doing well at the high point of trade. Mr. Tyagi, it was a good set, and we had an inkling of that because of the response that you got to the Dahlias itself. The question is that at the 9-month mark, you've crossed your entire guidance for the year for pre-sales. So if you could give us a sense of what your new target for FY25 pre-sales is, and at the same time, if you could give us a sense into what you're expecting in FY26 with the balance of products left for you to sell.
Okay. So good morning, Mangalam and Nigel. We had guided the market for a sales of about 17,000 crores, as you're right. And as the numbers show, we have exceeded that in the 9 months. I mean, clearly, this is a great position to be in. We have, as we mentioned in our analyst call also on I think Monday, we have right now 3 projects which are underway from an approval cycle standpoint, which is the Mumbai project, the next round of Privana and Goa. And frankly, this is a business which sort of, it's reported quarter on quarter, it's not run quarter on quarter. And I think depending on how the approval cycle happens, we'll see the launch in Q4, if at all. We are currently continue to be optimistic on Mumbai that if we can get all the approvals in, we should be able to launch it before March end. But again, if it sort of overshoots by a couple of weeks, I don't think we are losing any sleep on that. So I think we'll clearly exceed 19. What the final numbers are, I think let's just wait for the year to end. And as far as the guidance for the next year is concerned, Mangalam, we have the products lined up for sort of launch in the medium term, including the fact that Dahlias itself has almost a 23,000 crores, sales potential still left. So I think we would have a healthy 25-26 as well. But again, as has been our convention, we typically announce the guidance for the fiscal when we report the annual numbers in May.
All right. Hi, Mr. Tyagi, and good to see you. When just looking at this project that you were talking about, the Dahlias project, I believe the average ticket out there is 70 crores, a massive one out there. Give us a sense on demand. There's that fear that urban demand suddenly is slowing down. But if you're selling some of these projects, then clearly you're not experiencing that. But give us an update. How do you see things shaping up?
Okay. So firstly, of course, Nigel, I'm always a trifle scared of you because of your extremely strong grip on numbers. मुझे डर लगता है आपसे बात करते हुए, but
that's the numbers is all we can hold on to. But these 70 crore projects and all are something that make us a little bit nervous and tell us there's lots more to achieve in life. Give us your sense on urban demand.
So here's the deal. Yes, it is correct that the average selling price that we have achieved in the first 170-odd apartments you have sold is about 64,000 rupees a square foot, which does tend to be almost a 70 crores as the ticket size because most residences are between 9,500 square feet, plus. Now, a large part of this phase 1 of the launch has actually been lapped up by the existing customers of Aralias, Magnolias, and Camellias. And there has been, I think, about a 10 to 12%, chip in by the NRIs as well. So clearly, while the story of the slight, moderation in the urban demand may be true from a holistic standpoint, I guess in the luxury and super luxury segments, the demand and the hunger for the quality lifestyle continues. In fact, not only here, we see that trend also in our luxury malls on a completely different, perspective. But I think clearly, the luxury and the super luxury segments continue to do very, very well, at least, in the markets that we operate in, Nigel.
All right. You've given us a sense of pre-sales. You've given us a sense of the launch pipeline as well and the outlook going forward here. What the street also wants to know is a word on collections. What are your target collections for this year? By the end of this year, what will be your, operating cash flow that will come into the company? And to that extent, what's the proportion that one should work with in the next year as well?
So this year, this quarter, we reported operating cash flow of 1,800 crores. I think across the 3 quarters, we are now at about 4,800 or 4,900 crores. So clearly, we will continue to hopefully collect at this clip of 3,000 odd crores a quarter, and which will translate into an OCF of somewhere between 1,500 to 1,800 crores of operating cash flow. And I think those are the metrics that we should continue running at. In fact, while obviously there's been a lot of I'd say positive vibes on the pre-sales number, The fact is, what we truly focus, Mangalam, and pride ourselves on is the focus that we do on two metrics. One is the new embedded margin that we are creating, and one is the operating cash flow. And I mean, in this quarter, we added almost 8,000 crores in the margins column and almost 1,800 crores on the cash flow column. So clearly, I think operating cash flow continues to be very strong, and also a very strong focus area for us. The only tone of moderation, I'd say, is that given the construct of the RERA regime, a large part of the cash flow does get entrapped in the 70% escrow accounts, which obviously is used for construction, but the margin, but the surpluses take some time before they're finally released.
All right, we're just going to wrap up, Mr. Tyagi, but I've got a number on the screen. The rental revenue was around 1,200 crores, which was up 10% on a year-on-year basis. What's the target out here? Very quickly.
So we are targeting exiting the March 25 with a run rate of 5,000 crores and exiting March 26 with a run rate of 6,000 crores on Cyber City, and almost 1,000 crores exit run rate in 26 for the DLF segment of the Rentco. So overall Rentco should be about 7,000 crores exiting March 26.
Is there any plan of you unlocking value out here? Because there's an annuity of close to 5,000 to 6,000 crores every year, right? So, I mean, if you do that, then if you do the reverse calculation, it could be a massive value generator for you. Is there a plan here?
No, it will be a massive value generator. Currently, Mangalam, we are in the process of building out significant build-outs in the rental business. I think a total of about 15 million square feet is under active planning or execution of the capex build-out. So I think really once that cycle is completed, at that time maybe GIC and us will have a chat on this. But in the immediate short term, there are no plans for monetization.
All right, we'll keep an eye out on that one. Thank you so much for joining in and giving us an outlook for all parts of your business. Wish you good luck and hopefully speak to you after the budget as well. Post announcements coming in from the finance minister, you give us a sense of there being some strong demand in the premium end of the market, but not so much in the middle and affordable. And could that change as well or not is a question that we'll get an answer to post this budget. Thank you so much for joining in.